This is Alan Bush with the Daily Financial Forecast for Thursday, March 9th. Stock index futures were under pressure in the overnight trade, but there was a very quick rebound with the indices higher now. This coinciding with the release of jobless claims that did come in higher than expected. In fact, at 211,000 against the estimate of 195,000. So this puts pressure on the Fed, at least to some degree, maybe not to be quite so hawkish if the employment situation may be slowing down to some degree. Moving over to the currencies, the dollar index coming under some pressure for the same reason, but in reverse with the jobless claims coming in stronger. This would suggest the Fed may not be quite as hawkish, and that undermined the dollar index, supporting other currencies. Also yesterday we had the Bank of Canada at their policy meeting, keeping rates unchanged as expected, and also news from Japan on their economy, which apparently stagnated, coming in unchanged quarter to quarter in the fourth quarter of last year. And the interest rate futures markets seeing higher prices over the last 4 or 5 days for the long end of the curve futures, the 30-year Treasury bonds. In fact, the technicals have actually improved in that period. At the same time, we did have Powell with his hawkish testimony before Congress. So the only place to be, I think, in the interest rate futures markets is in the 30-year Treasury bond futures. Technicals seem supportive. Fundamentals, I think, are likely to turn supportive as well. So any breaks in the 30-year Treasury bond futures should be used as buying opportunities. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.